Welcome, everybody, to Integrate Yourself. I'm your host, Allison Pillow, and you can find me at pureenergypdx.com. Today is going to be a really special show with a really special guest. Her name is Hilary Hendershott. She is the founder of Hendershott Wealth Management. Hendershott Wealth Management, a leading financial advisory and wealth coaching firm for women. Hilary's mission is to motivate women and their loved ones to be financially empowered and thrive. Her wealth coaching programs have enabled participants to finally take control of their money, learn healthy financial habits, and grow their individual wealth by millions of dollars. Hilary is the host of Profit Boss Radio, a weekly financial podcast where she and her guests offer women financial inspiration and actionable advice. She's also a TEDx speaker and has been featured in the Wall Street Journal, NBC, ABC, Fox, DailyWorth, Forbes, and Investopedia. Hilary was recognized as a top 40 under 40 entrepreneur in Silicon Valley. And in 2018, 2019, and 2020, Investopedia named her one of the top 100 most influential advisors in the U.S. Hilary has an MBA from Santa Clara University and is a certified financial planner. Hilary, thanks so much for coming on. Welcome to the show.
Oh my gosh, you made it through that whole thing. You are great.
I like to give my audience an idea of all my guest backgrounds because they're always unique and really, amazing. You know, there's so much there and I want them to know everything about you. So your full background. So yeah, there's a lot to talk about today, isn't there?
It's a meaty subject. And I guess I feel really blessed to have found a space in the industry where I can talk about the things that matter to me versus the Wall Street speak and the language that tends to be, and I feel like it's okay for me to say this on this show, but, frankly, very egoic. It comes from a competition context, and, money doesn't have to be that. And yet you can still be triumphant and successful and free in that area. And so it's just really fun to have gotten to this place in my career where I can make money and talk about things that aren't, how do I say this? I can eschew the traditional.
Yes. Right. Money does not have to be evil, and it doesn't have to be, about greed. It can also be about safety, security, and fun, and bringing to life, helping you manifest what you really want and desire in your life. Money can be a form of support in that area. I think of it like that. And that's helped me a lot throughout the years. I would love to get started on, first of all, whatever you'd like to share and start with, Hilary, but also how did you get started in this business of being a financial planner, and how challenging, I know that you were talking about these challenges that you had come across when you started in this industry. Can you share what your experience was?
Yeah. Yes. So I started out a pretty hardcore economist when I got my degree in economics. And when I got out of school, everything to me was a meritocracy. I didn't understand why you would have a networking group of only women, because to me, you wanted to have a networking group of the best people. Like, it's very clear you want the best people. Why would you choose based on gender, right?
Right.
I got started in my dad's financial planning business. So I was supposed to be the business continuation plan. So then I got my certified financial planner designation. And then pretty soon I started to realize a disconnect. So in my personal financial life, I was a massive overspender. I always had car debt. I always had credit card debt. I would run out of cash and my dad would have to bail me out. It was embarrassing, but it was like the way my life had always gone. But it finally started to show up for me as a bit of hypocrisy, like a conflict. Like, what am I doing? I understand mutual funds and ETFs and the stock market, but I can't pay my bills. It's like, it doesn't make sense. Right.
It's the practicality part, right? It wasn't being implemented.
And it turned out I had gotten imprinted, and not by my father. I lived primarily with my mother, and it wasn't her fault. My child mind made some stuff up about money. And I ran around in my life for 25 years manifesting that superstition or belief about money, which in my case was there's never enough, right? Yes. And that's a pretty popular belief about money. It's not the only one. Everyone doesn't believe that, but it's very popular. And so things came to a head for me because during the financial crisis, I was in financial services and my income went almost to zero, and I had more overhead than I could afford. So I also had a condo where my indebtedness had gone to about $420,000, and the fair market value of that condo dropped to $190,000. So I had all this uncollateralized debt that was like really frightening. Those numbers were just out in the stratosphere for me. I had a BMW that I had leased. I had $25,000 in credit card debt. And finally, the day came when I had robbed Peter to pay Paul. I had emptied my retirement accounts. I had borrowed every dollar I could. And I literally put my credit card in the gas machine to buy gas for my leased BMW. And my credit card was maxed out and my bank accounts were empty. So I was literally broke. And I had to make some very serious choices at that point. It was like a life reflection moment, right? And there was this moment where I could see my life extrapolated out over 30 years. And I really saw clearly what my life would look like if I continued to behave this way about money. So I said, this isn't how my life is going to go. Like, I'm just going to fix this. I don't know what to do. I don't know how to do it, but I'm going to figure it out. And that's when I hit the books. I decided to become an expert on money psychology. I had attended a talk at a financial advisor conference where the woman used the word under earner and overspender for the first time. That's the first time I had heard those terms, right?
Yeah.
But I knew when I heard the word overspender, I knew I was one. And that's how I learned that we, like I said, we get imprinted with these beliefs and superstitions about money, when the truth is money is a completely blank slate. It doesn't have any characteristics. Money just is, right? And yet we, because it's a super conceptual topic, and frankly, most adults don't understand money, and then they impart brokenness about money onto their children and then sort of rinse and repeat. And we're all kind of nuts about money. But the good thing is it can be transcended. You can like overcome it. And so I did slowly-ish, it took about, I would say a couple years to dig myself out to where I could pay my bills. And I renegotiated the credit card debt down. My FICO score came back up. At this point, and I'll just share some of the numbers just so your listeners know that I'm for real, is I live in a house in San Jose. It's probably worth about $2.5 million. Other than that, my husband and I have enough money where I could stop working. I'm literally financially free. The reason I share that again is so you know that I know what I'm talking about, but also so you can see. I think that the point I want to make is that if you are all able to alter your money psychology, you can, and in fact should expect non-linear, unexpected results. That my financial life was going like this, and then it went like this. And for those of you who are listening to audio, it was going down slowly to the bottom, and then it went almost straight up to the sky. I had the experience that I would get these downloads in the shower, and then my business would double the next week, right? And it was because I had opened myself up to the wisdom of money that's already in the universe. And I'm not a woo person, right?
Well, I mean, it's okay to be a little woo.
Yeah, I mean, woo is okay.
But you're a practical person, it sounds
like
too.
I got hit over the head with it, right?
Yeah.
And then just to round that out, because I started by talking about being a hardcore economist, I put myself into a mastermind that was all women. And that's where I learned what it's like to be part of the community of women supporting women. And I knew this was my place. And so life has softened me and altered me. And so I really have thrown my hat into the ring and committed myself fully. At this point, my team is all women owned and operated, and our client base is 65% women. So I'm very interested in supporting women to build wealth and meeting them where they are. So I think that's a good intro.
Oh, yeah, that's fantastic. Thank you for sharing that. And it sounds like you got caught in the 2008 financial crisis. Yeah.
That's the one.
Yeah, I had a similar experience and unloaded a lot of debt during that time too. Very similar. It was like I was faced with that, like, do I want to keep doing this or, and kind of became very minimalist in my way of thinking. And then at that point I said, well, um, I moved over more to having a better relationship with money and really learning how the skills to manage my money much better than I was doing before. Because before it's just like when you're younger, I feel like you just fall into using the values that you thought you learned from your parents. It may or may not be that, what you perceive to be that. And like you said, using the language that you learned as a kid, like there's not enough for, to go around, or, that scarcity mentality around money, or the old ancestral stories that got passed down about money. And those can shape and form our reality as adults and the relationship that we have with money. And that's what I experienced too. And then I thought to myself, well, I got to start looking at it differently now, because if I want to be able to, uh, feel at peace with myself around money, because otherwise it's just going to be a
It's not
struggle.
going to happen. Yeah.
Yeah, totally. So I
Yeah.
love that. Yeah. And that was a big lesson for so many people. And then I thought, well, then all of a sudden everybody started acting like, oh, there's a lot of spending afterwards, and people were then buying houses for large amounts of money. And now I think what we're going through, I don't want to leap over to this subject, but I just want to put this out there. I think what we're experiencing now has a lot to do with that time period too, and so I don't know, you can correct me if I'm wrong, but I'm seeing a little bit of a correlate. I mean, of course, because it all builds on each other, but um, it's interesting because I see that. Oh well, we'll get into this in a
Yes.
little
Tell
bit.
me what
It's
you,
pretty
yeah.
convoluted. Never mind. But all right, let's stay on course here. But because I do want to hit some other topics before we get into that, because that we're going to build up to. But okay, so you work with women. This is a fairly a new skill set for women. Women generally right now we're especially young women, they're like probably thinking, well, no, it's not, but yes, it is. In my lifetime, I just wasn't, I think, as a Gen Xer, that was the split, is when women started to kind of start to make their own money a lot more. The 80s it did start somewhat, but women for in general were still depending on their husbands mostly for financial wellness, and to also manage the money. But as we progressed through the 90s and beyond, women started to take the reins on that much more. And now many are left, including myself. I found myself in this position of not knowing how to manage money and having to learn how to do it, and also having to strengthen my relationship with money. So, how do you help women start with that, and because you have a 7-step wealth framework that you use with people, and I would
Sure.
love to hear more about that.
Sure. So one of those shower downloads that I mentioned was that part of my gift is to take semi-technical stuff and translate into language that anyone can understand. And that's not to talk down to people, but I don't know anything about geology, or, I would need someone to do that for me in the area of astrophysics, or right. But this happens to be my area, right? And so this download said to me, Hilary, some of your lessons are really hard earned. In other words, you've got a lot of wisdom about money now that you did it the hard way. You can actually create and teach ways to collapse that time frame for people. So I looked back at what I had done. So standing in the present, looking back at my journey, I created a 7-step formula. And the idea is that you have to have these 7 aspects of your financial life working, or you run the risk of it all falling apart. Let me just give you an example. You've all heard of lottery winners and how it's more common for them to go broke or even be financially worse off after they win the lottery than it is for them to enjoy financial abundance for the rest of their lives. I think something like 50% of all NFL players or former NFL players are bankrupt.
Yes.
And that's an example of them not having one of these 7 steps to wealth in place. So most people focus just on earning, but that's just one of the 7 steps, right?
Right.
So the first step is psychological. It's decide. You really have to decide to be rich. You have to decide to become financially free. And even this decision is out of reach for a lot of people because there are so many mindsets out there that it's like, oh, it shouldn't be about the money. Rich people are greedy. I would rather be all about my family, right? We treat it like it's a mutually exclusive decision. Like you can't be financially free and a good mom or and a good wife or happy, right?
Right.
And that's all just self-imposed stuff. The other really key aspect to this is that you are fundamentally the only person whose job it is to secure your own financial freedom. That you may have a financial partner like a spouse or a husband or a wife, and that person is in that partnership with you now, but that's not eternal. You're the only one who's going to be with you for eternity, right?
Yes.
For the rest of your life. And there's no one else who's going to nominate you, secure it for you, fix it for you, come and save you, right? And that is the really weird part is you have to elect yourself. Someone else I heard say you have to be a person of strong character. And, both of those ways of describing that is like, you have to have boundaries in place. You have to say, nope, this is mine. It's not yours. I'm not giving it to you or loaning it to you or letting you have it or letting you play with it. No, none of that, right? So that's decide.
Right.
And then there's speak. And it's really important the words that you say about money, just as an example, if you're saying things like, I can't afford that, or, let's see, it doesn't have to be about the money. I don't need to get paid for that. Things like that, right? These are examples of money dysfunctions, little money dysfunctions. And I often just give people replacement scripts. So sometimes you can just change your financial world by changing your speaking before you change your beliefs. That is possible. I have done that.
That's actually really smart. That's a smart way to go about it. Yeah. Because our language, one of my teachers described it as your language is your vision board. You're actually creating a vision board with your language, your internal dialogue.
Yeah.
But yet we tell ourselves what we don't want constantly, right?
Oh,
whereas if we were doing a vision board, we wouldn't put something we don't want on a vision board, right? But we tell ourselves that.
Yeah. And just as an example, if you're saying I can't afford that, I invite you to consider one of 2 alternatives. One would be, I'm actually not going to put that in my spending plan. So just take responsibility for it. Or if you do want it, say, let me figure out how I can do that. I'll get back with you in a couple weeks.
Yeah.
Right.
Yeah. Right. And many times we say we can't afford something we don't really want to, or we just use it as an excuse, right?
I know. And, I don't even let myself say, like people will say, can you do this on Friday? And people will say, I can't. No, I can. I can't. I'm just not doing that.
Right. I just don't. Yeah, exactly. I'm just not doing it.
It's just not happening.
It's my choice. And you own the decision too. It's more empowering in some ways instead of, yeah.
But you do have to take responsibility. It's about that strength of character that we talked about in the first step. Okay. So that's speak. And then there's plan. So plan is the part where you make sure that you're bringing in more than is going out. You can measure how much you're saving and know approximately how much that will be worth in the future. And that's a relatively technical calculation. You could do it online if you wanted. You don't have to use a budget. I hate budgets.
What do you use instead?
I use a system of multiple accounts. So I have one spending account. Yeah, because Parkinson's law says you're going to spend down to 0, right? It says a project will take as long as the time you allow it, right? And it's the same thing is like if you put $100,000 in a bank account, you're going to spend it, right?
That's true. It's going to be very hard not to spend it. In other words,
I hide it. I hide it in little other bank accounts. So that's planned. Most people never get through that phase.
That's a really good idea. I do that too. But I didn't think of it as a strategy. I just thought, okay, I just won't, it'll be something I'm not even going to touch. Right. I'm just going to,
It's a great strategy. It works. And I have accounts for my next car. So I pay only cash for cars. And out of that account, I pay for all auto repairs as well. I have accounts for holiday spending. So I'm someone who celebrates Christmas, but other people have different types of holidays that they spend a lot of money on, gifts or events. I have not gone into debt for that for 15 years or more. But your next vacation, you really need to be saving for these things.
Yeah.
So I invite you to become someone who doesn't have financial emergencies.
Right. Because if you save it for a rainy day or an emergency, you're gonna ultimately have those things come up, right? I mean, it's because it's that intention, right?
Yeah, yeah. But oh God, you're so good. You're so on it with this. But people say, oh, my car broke down. It's an emergency. Well, no, it's not. Cars break down, right? The emergency is that you didn't save, right?
Right.
Or the water heater or the roof or whatever. These things, they're going to happen. And we know in life that we can't predict exactly when they're going to happen. And by living at zero or close to zero, you are setting yourself up for financial emergencies. It's an unavoidable future, right? And I did it for many years and I know how painful it is. I'm just saying it's possible to reverse engineer the opposite outcome. Okay, so that is 3. That's plan. And then you have earn, which of course, whether you're a wage earner or an entrepreneur, you have to earn more money. And then over your life, you expect your earnings to go up. But of course, as an entrepreneur and as a corporate employee, you command that. You can ask for raises or raise your prices. The 5th step is ask. This goes hand in hand with earn, but asking is about altering your relationship to no. So many people don't ask for what they want because they're afraid to get rejected. And
So true.
yeah,
Yeah.
it's just
I'm definitely one of those people. I've been practicing that more just
really.
to ask. Yeah. Yeah. Because I was like, this is one of my things that I've been working on is, because I'm publishing a book soon and I'm going to have to ask people for favors. At
Yes,
some
you are.
point. And so I'm really trying to get better at that because I'm always, I've had this thing in the past about not being rejected. It's totally normal for a lot of people. But also just not wanting to bother people, which is kind of weird because if you think about it, like not bothering anybody,
So female. It's so
yeah.
female. I know it well. I know.
Yeah.
But in my coaching program, we play this game called the No Challenge, and I invite people to alter their life by altering their relationship to the word no. And so I ask them to go get 100 no's. So far, no one has done it, but I promise you, if you go get no 100 times, you will absolutely transform your life in the process because you'll get so many yeses that surprise you.
That's awesome. I love that. Yeah.
I mean, I even have people ask for a discount at Starbucks. It's like,
yeah, that's a good idea. Yeah. I mean, you never know. I mean, most of the time, I just had a discussion with somebody yesterday about this, a friend, and basically, and I've experienced this in my life too. You just don't, most of the times people get opportunities because they ask,
Yep.
Yeah. 90% of the time.
You have to nominate yourself. At some level, first of all, you having a podcast on iTunes is an ask. This is an ask, right?
Yes.
I mean,
yes.
I don't know what you mostly invite people to do, but you're out on the skinny branches. For goodness sake, you have a picture of your whole body on your podcast artwork, right? It's like, you're courageous. Yes. This is a thing.
I'm
right?
putting myself out there.
Yeah.
Yes.
And then I think probably my team asked you if you would book me. So I delegated that ask, but there's asks involved in all of this.
That's so true. Yeah. That is the step of taking action. The ask is really an action taking step.
It is an action taking step. And then I pictographically, I ask people to relate to it. Like you're commanding your life to get bigger. You're increasing your trajectory, right? Over time, you want more and more success. You don't want to go backwards. And so asking for a raise or asking for a nanny share or asking for a business partner or asking for a book review. I mean, these all qualify. And I'm still mortified to negotiate at the, you go buy a pair of earrings at the vendor at the trade market, right? Negotiating is not in my natural skill set, but sometimes I force myself to do it because I'm like, well, I got to be a leader, right? And I still feel chintzy doing it, but I take that feeling and I set it on a shelf. It's like not real. That person can say no, right?
Absolutely.
And I promise you, they've been negotiated with before. So that's ask. And then And then of course invest. So over time, you want your savings, your retirement nest egg or your financial freedom nest egg to get bigger and bigger. And you do that through evidence-based ways. That's a whole other morass. And then there's protect. And this is the really key one is once you have assets, you want to protect them with things like an estate plan or property insurance or life insurance if you have a family, right? But also your behaviors. I tell people build a moat around it. Once you've saved it, don't put it at risk.
Right.
Don't do risky crap. Am I allowed to swear on your podcast?
Yeah. Give me an example of something risky, like you've seen.
Okay, you invest in your brother's restaurant.
Oh, right.
Yeah, it's just maybe 5%. If you have $100,000, you want to give your brother 5K, go ahead, but not more than that.
Right. Yeah. There you go. Okay. Yeah.
Like do diversified, conservative, evidence-based things with your money so that to compound that, like just alter your strategy with 95% of that nest egg. And then, don't go over that. But let's see. Invest it in a try to flip a house. Oh, take all your savings and go flip a house. Oh, I feel heartbroken for people when they tell me they've done that. I'm sorry. Did you do that?
I've done it.
Did it go well?
So my story is we had this, my husband and I had this development company. We were building new house, we'd buy old houses, flip them, fix them up and sell them. And then we would also build new houses, really great little houses, like 3-bedroom, 2 baths. They're really selling like hotcakes in this one neighborhood. And then this is when we lived in Atlanta. So the market was really great. And then we moved into this, we were taking it up a notch and making a big leap into the $1 million, range neighborhood and started building $1 million houses. And then right at that moment, we could have like become really rich or lost it all. The 2008 crash happened.
Yeah.
So we had like at that time, a bunch of investors and, we had a lot of debt because we had these houses and, it was like right before that if we would have, there was a good chance to sell all of them because the market was really great. But then like that market changed. Yeah. But then the unfortunate part was unfortunate or fortunate. We learned a lot from it. So at this point, I can say that it all worked out.
Yeah.
But of course, then the market went up like crazy after that. And then people started making a ton of money and the value went up much more after we recovered from that recession. But
did you still own the houses when they started going up in value again?
No.
Yeah. And almost in no cases, almost everything changed hands at the bottom. Almost everything went from people who had debt to people who had cash.
Yeah. And we were really successful for a while until that happened. And then
this is a little different than what I was talking about because you and your husband had a skill set.
Right.
And you were doing it professionally, right? You had a model that you were following. You had spreadsheets that you filled out to evaluate the property or the vacant land before you built on it. Like you had a professional model that you followed, right?
Yes.
I'm talking about people who are just amateurs. And it's not a value judgment to say the word amateur. I am an amateur house flipper. I've never done it and I never will. But it's those kinds.
It is a big, you're getting into a lot when you do that. People think it's going to be really easy, but it's not easy. You got to do the research, and yes, I agree.
Yeah. So when I see, or for example, people who tell me they want to day trade, this is a massively risky behavior. No, you could make a bunch of money. It's just that you probably won't. That's what the data says. That's what the evidence says, right? So I tell people, again, 5% is a great rule of thumb. Do evidence-based things with most of it. Do the other stuff with less of it.
I love that because then you're dipping your toe in a little bit. And if you really like it and it works out, then you can put more in later, right?
Yeah. If you're going to be a day trader professionally, you should be able to make enough money to grow that 5% to be pretty big, right?
Yeah. Yeah, absolutely. Yeah. And it gives you space and time to develop those skills and become much better at whatever you're trying to do,
Yeah, it's just
Yeah.
like in my business. If I want to go do a new thing then or build something, I earn enough money selling an interim first version of it that then I reinvest it and I build it bigger and I reinvest it and I build it bigger. I don't take the whole golden goose and squander it on some idea, right?
Right. Yes. That makes a lot of sense. That makes a lot of sense. Good
So that's
advice there.
that's protect. That's the 7 steps to wealth. And honestly, if you get those 7 steps working, I promise you, you'll have fulfillment in that area of your life. I can't promise you you'll have enough to stop working tomorrow, right? Because the numbers matter, but you'll be ahead of most of your friends and neighbors. That's for sure.
What's your advice on investing money in the stock market and uh, real estate and those kinds of things? Are those good investments in your opinion right now?
Okay, so I am going to start this conversation by saying, if you're listening to this and you're not my client, I don't know you, so I don't know your timeline or horizon or risk tolerance. So please don't take anything I say as investment advice. It's not customized to you. So let's talk fundamentally about the different kinds of investing, because one of the things I said to you, Allison, before we started talking was, you can decide what kind of person / investor you are, and you probably can and should invest within those guidelines. So,
Oh yeah,
uh,
let's talk about that. That's a
yeah.
great. I love that.
So there are some people who always want to or should be delegators. Okay. You should just delegate investing. I delegate the formulation of my prescription medications, and I always will. I delegate my obstetrics. I delegate the manufacture of my clothing. There's no shame in delegating your investing. And if you're going to delegate to a professional. In my opinion, there are robo advisors, or also known as digital investment platforms, that are using evidence-based methodologies that require no management on your part. Okay, so if you're going to delegate, just delegate to an evidence-based methodology, someone who's doing it for you. Make sure you watch it at least quarterly, and you should probably be fine. Honestly,
Is that like an Acorns or
no.
are you, oh,
Acorns
you're
is
talking,
something
okay.
different. Betterment, Ellevest, Wealthfront, Personal
Oh, okay.
Capital, like that.
Where you're not really working with a person, but it's is that what you're saying?
So
Or
so I'm offering that as a low cost stepping stone to delegating investing. It is a way
oh,
to
okay.
yeah, so you don't get a person. So that's not what I
Gotcha.
do. I'm like, what I do costs about twice as much, and then you get a human being. So when you start to have complexity in your life, you're going to want advice on more than just the investments, right? You want to make sure all the pieces of your financial life, including the insurance and the taxes, are coordinated. And that's when you could consider working with someone like myself, doing comprehensive advice. But getting back to, I'm getting a little bit away from how to think about investing. So there's delegators, and then there's DIYers. And so
Mm.
if you're a DIYer, you're probably what's known as an active investor. You want to go out, evaluate investments, decide which ones you want to invest in, and then buy them, and hopefully buy low and sell high. That's the idea, right?
Right.
And so just a few ways to understand the characteristics of those investments. First of all, it would be impossible for me to pass judgment on all of real estate. There's so much inside the asset class of real estate, because there's commercial properties, there's apartment buildings, there's single family residences, and every piece of real estate has its nuances. It's going to be impacted by the tenants, by the weather, by the traffic patterns, by whether Amazon puts its headquarters near you or not,
Cities. Yeah. This
right? Right.
where they're having riots, where they're not having riots.
So, just for me, that's not the kind of investing I want to do. I have seen people make money that way, and I've also seen people lose a lot of money that way. So, but I certainly couldn't pass judgment on the entire industry of real estate investing. I will say that real estate investment trusts are kind of like a mutual fund, and they're a way you can delegate the selection of your real estate. So you could be a delegator in the asset class of real estate. But I think why you started this conversation, maybe about the Bitcoin craze. Is that?
Yeah, I was curious about that because of course there's a lot of hype about it. I have a little bit invested in Bitcoin, and I watched it go up and almost triple. in value. And then all of a sudden, since now they're trying to poo-poo it, and it's gone down a little bit. Not noon. It's not, it's still almost doubled,
Yeah.
but it's gone down. So my guess is that people's confidence in it went down too when Elon Musk made that announcement. And then, it's just like, I feel like it's getting, I'm not really sure, what's going on there, but I feel like there's this push to not try to have another type of currency here. So,
Yeah. So Bitcoin is a currency, just like the euro or the kroner or the US dollar. So has things in common with like gold and silver. Gold and silver are just rocks, by the way. They don't have any value. They don't produce any value. The only reason they are valued is because other people are willing to pay for them, right? So the thing to know about trading currency is that you can only make money in currency on the trend. So you can buy long and make money when the currency goes up against the dollar, or you can buy short, or you can do option contracts and make money when the currency goes down against the dollar. It's not, Bitcoin is not a company that's producing shareholder value or customer value like Starbucks, like Microsoft, like Apple. Right. Bitcoin doesn't have any products. Bitcoin doesn't, have product releases. There's nothing like that. So you only make money when Bitcoin changes value against the dollar or the currency that you're trading in. So just know that. So if you were a professional currency trader, probably you would be focused on either making money when Bitcoin goes up or Bitcoin goes down. So just let that inform your exit strategy. So I meet people.
I don't have that much. I'm just dabbling a little bit, just to see.
Yeah, but you want to be a serious, if you're going to do it, at least try to do it right. And you want to know, that's the thing is when you get into an investment like that, a professional investor always knows when they're going to get out of the investment.
Right.
Like you had a plan when you were flipping houses. Get in, do the things, and then put it on the market. And you were targeting 20 or 25% or something like that. And you had a plan.
Yes.
Most people who buy Bitcoin have no plan.
I can see I can see what you're saying. Yeah. Makes sense. They're just doing it because they are like, oh, this is cool. Let me, and they probably, I know there's this big push too to get off of the dollar because there's this, and again, you're the expert here, so correct me if I'm wrong, but I sounding like the dollar is losing value because we're making, there's so much digital currency right now. Well, because, we can just create more money and we're continually to do that. So the value of the dollar is going down. Is that true? And, is it because like we're getting, are we going towards like a universal like income thing here, do you think, or what's going on?
You just asked like 17 questions.
I know. There's so many. You can probably guess, Hilary, this is not my expertise. That's why. And I hardly have anybody with your expertise. I think you're the first person, financial planner I've had on the show. So sorry for all the questions. I'm so curious about all this stuff.
I can tell you are. Okay. So first of all, you need to realize that most of the media, most of the folks whose voices you're reading in the financial news media don't have any technical training on economics or finance or investing. They learn it from interviewing people like me. Okay. So there's often nothing really fundamental backing up what they're saying. They're often looking for the phrase, if it bleeds, it leads, holds very true. So they're looking for very extreme examples to write stories about. Mr. James took all of his money out of his IRA. Now he's got $100 million in Bitcoin. Okay, hooray for him. I mean, I would have to see his investment statements. I don't trust it until I see it, but fine, that's happened. Absolutely. But there's also 1,000 examples of someone doing the same thing and losing everything. Okay.
Yeah.
They say 20% of Bitcoin is lost forever, right? Because people lost their encryption keys.
Oh, wow. Yeah. It's not like, it's not something that people know a lot about right now, it's very mysterious.
Like there's like peer pressure. to get into it. It's like the cool kids are doing it.
Right. Oh yeah.
Right?
Yeah. Yeah. I see
Because
what you mean. Yeah.
because there's people who just love technology. And so they're going to be for Bitcoin because Bitcoin is technologically oriented and they love technology that disrupts. And by the way, Bitcoin has not disrupted the US dollar. I mean, it could, but it hasn't. And it doesn't show signs of doing that. So, and the other thing is people love, there's like an activism to Bitcoin. They like the idea that the Federal Reserve doesn't manage it, that supposedly the government can't get at it. Except for 2 weeks ago, just so you know, the federal government broke into the Bitcoin accounts or wallets of the hackers for
I think I did hear about that. Yeah.
the pipeline common something.
Oh yeah. The common,
They paid a ransom.
gosh, what's it called? Colonial
I think it's Colonial Pipeline. I think you're right.
Pipeline. Yeah.
So they paid a ransom to these hackers, and then the key that the hackers gave them didn't work, and so the U.S. government broke into their Bitcoin wallet. Now I promise you, if the U.S. government can break into a criminal's Bitcoin wallet, they can break into yours. I promise you.
Yeah, that's true.
So this idea of sovereign wealth doesn't, first of all, I'm not sure I see a ton of value to it unless frankly you're a criminal. But second of all, it doesn't seem to hold true. And so, but there's just this idea that you can make untold amounts of wealth. And so I think people feel pressured to get on board.
And they want to get in early while they can make money from it, I suppose, right? Like everybody thinks if you get in early enough.
No, it's too late for Bitcoin.
It's too late.
Bitcoin is not early. Yeah. I mean, 100% of Bitcoin has been mined. It has a finite, there's a finite amount of Bitcoin in the world. I mean, you can tell just from my tone that I'm not a fan, but that's not.
It doesn't sound like, yeah, that's okay. Well, I would expect you to I don't know, be a little more conservative with what you do. I mean, it would make more sense because people are depending on you.
I'm anti-fad. Yeah. My clients come to me because they want to delegate it and they count on me to make consistent returns.
Yes.
And so far, all the evidence we have says that what I do, I can promise that over the long run. So I'm going to keep that promise. And that's my professional responsibility. So again, just to reiterate, a lot of people have and will make money in cryptocurrencies. It's not just Bitcoin. However, it's not predictable or reliable, and it won't be long-term, right? Because this craze, this fad will evolve. Something will happen. It will go away. Just like, when we were coming out in the 2002, 2003, it was solar stocks. Oh, you have to be in solar stocks. Everything's solar, right? And solar technology is great. I mean, there's solar panels everywhere now, but solar stocks never did anything interesting.
No, they did not.
No, right?
Yeah.
That's the thing I think people don't realize is to the fact that you imbue good characteristics to a particular thing doesn't mean that it's going to take off from an investment perspective, because all those good feelings are already integrated into the price of the thing now. So it has to do something new for it to go up in value. That's what's happening with Apple stock right now. Apple stock went to $3 trillion without it. Its market capitalization increased by a third without its value increasing by a third. They literally didn't have a new product announcement. They didn't do anything new.
So how did that happen?
Good feelings.
The feelings.
There's two things that comprise the value of a stock. And this is different than Bitcoin, but a stock is its fundamental, technical, or book value, plus people's temporary emotional sentiment.
Wow.
Yeah. So we try not to follow the sentiment.
Yeah. Yeah. And, I think also that you're led to believe that those stories are so common, like, oh, you can become a millionaire or a billionaire or whatever. And it, just by investing before it gets really popular or whatever. And sure, I mean, some people do that, but really what is more valuable is learning how to do it sustainably, long term, manage the money, build your wealth that way, right? Like what you're talking about, because it's not as if even if you do become a millionaire or a billionaire overnight, you still have to learn how to manage that money, right?
You do, and a lot of people lose it. And I think the only thing I'll say in response to what you said is you're talking about the difference between skill and persistence and luck. So yes, a lot of people get into the ground floor of something and get really rich, but fundamentally that's luck. I mean, they didn't know. Nobody can tell the future. The future is unfathomable and unknowable. So
Right.
you can, I mean, put your eggs in a bunch of baskets. I can't predict what's going to happen to whatever thing you want to buy at its in its nascency, right? But Bitcoin is not in its nascency. The entire planet knows what Bitcoin is.
Exactly. That's very true. Yeah. Yeah, it's over already, right?
Well, no, Elon Musk is going to talk about it for the rest of his life. He's going to take it, put it in a spaceship and take it to Mars with him.
Right. I don't even think he's going on the spaceship now. I heard he's not. He's just going to watch the other people go.
Yeah, I wouldn't. I wouldn't go on the
I wouldn't
spaceship.
either. I don't. I like Earth. I'm good. I'm good right
I'm
here.
good. Yeah, I'm good here.
So I would like to also talk about, let's switch over to dissecting what the media is telling you versus what's really happening and how you should be managing your own personal economy. I don't know if we hit upon that point. I mean, we just talked about a whole bunch of stuff that probably did, but
But I can say more about it.
Yeah, let's expand on that a bit.
Yeah. So to expand the conversation about the media from the idea of just Bitcoin or the economy, you have to realize that what you're reading in the media is not a representative sample or example of what's happening in the world. That it is possible and probably even justified to insulate yourself from the emotional conversations that go on in the media, which will perpetuate forever because they can't sell advertising if they're not trying to scare you. You will notice if the market is going up, it's a bubble and you need to be afraid. If the market is going down, it's never coming back up and you need to be afraid, right?
So don't do anything.
Right. No matter what, they're going to say you're in dire straits, right?
Yeah.
And so, the perpetual tenets of financial health hold true and have held true. I've been in the business 21 years. And we have 100 years of stock market and investing data, and the same habits that would have had you be successful in the 1930s in the areas of saving, investing, and financial prudence will have you be successful now. That it is okay to insulate yourself from that kind of messaging, and just know that often what you're reading is not true. I used to actually publish in my newsletter. I would take articles just from the major news and I would say, this is nonsense, absolutely baseless, factless. It just shocks me that people print the things that they print, right? All designed to scare you. I used to take apart, you see these newsletters that talk about how our economy is based on nothing. It's all fiat currency. The Federal Reserve is the source of all evil, right? And that we all need to buy silver and gold. Peter Schiff and his friends have gotten very rich because people believe this messaging. And yet it's never come to fruition, right?
Right. I know, exactly. I'm like, yeah, I thought about that too. And I can apply that to the health industry as well. same principle.
Right.
Right. So I know exactly what you're saying.
Eat your vegetables. Don't eat too much fat.
Well, saturated fat is the best.
Right. I'm with you. I'm with you. The avocados are good. But yeah, I think probably some of you who are listening, who are living in fear, have decided to but it's out of a negative reaction to put your nose to the grindstone and insulate yourselves from the media. I just actually want to reinforce that actual behavior pattern, but it's okay to not have it be in the context of rejecting society or rejecting what people are saying. Like it doesn't have to be inside a negative conversation. You can just be resolved to yourself. That's how the media works. And it will always work that way. Most people are misinformed. Most people are looking for a quick fix, right? And that you can design your financial life like the hare, no, the tortoise and the hare. And you know who won that race, right? That little tortoise won. Right? Yeah. And you don't need to feel like you're missing out on something. Like, you know, your questions today have been great. I can tell how curious you are.
Thank you.
A lot of people are not wanting to be that curious because they're just dominated by all the messaging, right?
Yeah.
And both ways of being are valid. And I just want to validate that. Like I'm just repeating myself now. It's okay to say, I'm just going to stick with the wisdom I know.
Yeah. And start there. Right. And then, learn more, like hire somebody like you, Hilary, and get them to help you, teach you, how money works, how to manage it, and how to have a great relationship with it, because I think that's where it all starts.
It's a lot more fun when you have a great relationship with it, for sure.
Oh yeah, totally. And you're not stressed out all the time. It's like, I remember a time in my life where I didn't think I would ever stop obsessing about money, about not in a way where I was just thinking about it all the time in like a scarcity kind of mode way, and it sucked. It really sucked. I don't think about it anymore.
Yeah.
Yeah.
And that all comes down to your thought and emotional landscape with money. So I bet if you look back on your life, as your thought and emotional landscape grew and progressed, so did your money.
Absolutely. Yeah. It's money is just a reflection of what is going on inside of you too. And from the way I understand it, it reflects your ability to receive the goodness in life. Like, and again, it's not saying someone's a bad person because they don't get a lot of money. Not at all. I'm just saying that for me anyway, that was how I saw it. And I could tell I was really resisting receiving in general in my life. And it, can go all the way back as far as our mothers and relationship with our mothers and how, we receive nourishment and nurturing and all those things. But ultimately it's about support, and like, and offering, and I guess opening yourself up to that support and security in your life. And there's a lot to talk about on that subject, but there's a whole spiritual aspect to it too. And I think that's always fun to think about, and it really helps it not be so such a struggle, and so and just a source of suffering. Yeah. Oh yeah. Well, that's what I think, there's so much, there's not, scarcity is actually not a thing. It's something that we have created. But ultimately, I mean, there's like, really, abundance is more of what we have access to.
Yeah.
And you can see that when you're out in nature. And I think that's how it works also with everything else. It's just that we've been taught otherwise. So,
or as women, we think it's noble. We think it's virtuous.
Yes.
Right?
Oh, absolutely. You have to sacrifice. Yeah.
What will you do if you won the lottery? Oh, I'd give it away. Oh, give me a break. Like, keep it for yourself.
Or share with others, invest in others, but like do things like you can still give and have a lot. You know what I mean? You can still, that's possible. Like you can still be a giving person and still have enough for yourself. And that principle is in health as well, and as well as money. Well, and,
yes. I see my clients' tax returns and I can say, I give away more money than most people I know.
Mm-hmm.
And it is a profound shift to go from being someone who can't afford to give money away to be someone who has more than enough. It's powerful.
It's a great feeling.
It is beautiful for me.
I love giving to people that way, just, and seeing them light up. It's really fun.
Yeah.
Yeah. Well, Hilary, thank you so much for coming on today. This was so much fun. And I learned a lot about Bitcoin today as well. And, don't,
well, you have to let me know how it goes in the end.
Yeah, sure. Yeah. Well, don't believe the hype, as they say, with just, stay grounded and we'll all get through this. But Yeah, this was awesome. Thank you so
Yeah.
much.
Thank you for your curiosity. You asked great questions. I'm so
Oh,
happy to be here.
well, thank you. Yeah,
All right.
I'm happy you were here too. And hopefully you can come back again when maybe the world changes a little bit more and we can reflect on that again.
Let's do it. I love it.
Okay.
All
All
right,
right, Hillary,
Allison.
take care.
Take care.
Bye.